Good morning, everyone, and welcome to the European crossover webinar. And overall, it's still a relatively quiet morning. I guess people on tap or on standby until we. I guess they're expecting a whole plethora of volatility. I guess after the signing for the phase one, considering that we're just not moving, with the exception of the dollar yen, and the dollar yen did go on and break higher, and we're just below. If you look here on the dollar yen, bear with me. We've been looking for, if we did break higher, which we did, a pause at 10.07. So that's what we're looking at. Potentially a move to 10.47 with a pause at 10.07. It looks like we're getting a pause at 10.07 at the moment. But once again, like I said, possibly at the phase one whole signing thing, that may allow that to go on and jump up. And then maybe we'll take a pause. We shall go on and see. But that's the only one with obviously definitely some real movement. Other than the cable continues to go on and slip here. Euro's trading in very quiet trading. That being said, at least it is holding its own here. We'll take a closer look at all these, but everything else is relatively quiet. Dollar, you can see how tight the range has not been able to get a daily close above this 97.42. And I'm talking about a daily. We're going to take a look at that also. You can see here, we're just sitting here, just quiet as can be. You can see the last two sessions, including today. And we have this downtrend line. Now, we've had, and I think that's going to remain, is going to be the 97.67 as immediate resistance, although they've been struggling on a daily closing level. It's 97.42 that's our key. We just haven't been able to break that, but a full-on buy is if we get past the this weekly pivot that's been around since forever, the 97.89. So, and Aussie relatively quiet. Let's go on and take a look at the news. But before we do that, we'll go on and see where we stand as far as data. And you can see really nothing until we get into the states in the U.S. trading, and we will have CPIs. It should generate some movement today. And that's going to be it. CPI, and then that's it until we roll into tomorrow. And we'll have French CPI, Spanish CPI, UK CPI, as well as PPI, as well as Eurozone industrial production. But for today, nothing until we get to the States CPI at 8:30 Eastern. Even the news is pretty light too, with the exception about the yen. The yen slips, the yuan ascends as the U.S. drops China from the FX manipulator label. The yen plumbed 8-month lows, while China's yuan climbed to its highest level since July on Tuesday, as the U.S. Treasury Department reversed its decision in August to designate China as a currency manipulator. The announcement came as Chinese Vice Premier Li Hu arrived in Washington ahead of Wednesday's signing with Trump of a preliminary trade agreement aimed at easing tensions between the two countries. Washington's decision to lift its designation of currency manipulator on China has added to the positive mood that has already been in place ahead of the signing of the trade deals. Minoru Uchida, People familiar with the negotiations said although the manipulator designation has no real consequences for Beijing, its removal was an important symbol of goodwill for Chinese officials. The dollar rose as much as a quarter of a percent to 1022 yen, its highest since May against the safe haven Japanese currency. It stood at 1004 yen, capped at technical resistance from Bollinger Band 1022. Achida said that the dollar yen is likely to face an uphill battle beyond the 110 mark, because the dollar is already expensive relative to the U.S.-Japanese yield gap, which tracks fairly closely. The main driver of the dollar yen is the yield gap. Last year, when the dollar was above 110 yen, the yield gap was at 2.4 percentage points. Right now, it's at about 1.8 to 1.9. And we could see a setback if upcoming trade deal does not go beyond what has been already reported. In addition, hopes of easing the U.S.-China trade war, solid Chinese trade data helped to boost optimism on the Chinese economy and the yuan. Exports grew 7.6% and imports jumped 16.3% in December from a year earlier. In onshore trading, the yuan strengthened to 6.873 per dollar, its strongest level since late July. The offshore yuan was also affirmed its strongest level in 6 months. We'll likely see a cyclical recovery in the Chinese economy during the first half of the year as Chinese firms will slash inventories to a very low level. Any moves to rebuild them could easily lead to a pickup in growth for a quarter or two. That should also support capital inflows. The yuan is likely to stick around at 6.8 per dollar, and we think it could weaken in the second half of this year due to various risks and uncertainties, he said. The European common currency came on a recovery after hitting a 2-week low at 10.85 on Friday, last traded at 11.37. Sterling came under renewed pressure after data showed Britain's economy grew at its weakest annual pace in more than 7 years in November, raising the chances of a cut to interest rates. Sterling traded at 29.90, having fallen to a 3-week low of 29.61 on Monday. And lastly, just a little interesting pair, because like I said, things have been so quiet. Gold dips to a near 2-week low on solid China data. Gold prices fell to the lowest levels in nearly 2 weeks on Tuesday, as risk appetite was weltered by the stronger than expected China economic data and imminent sign of a preliminary trade deal. It's mainly because of increased risk appetite and the U.S. removing China as a currency manipulator that's greatly eased economic tensions. Just a day before the Phase 1 trade deal signing, Treasury on Monday dropped China's designation as currency manipulator. Meanwhile, the Reuters report said that China has pledged to buy nearly an additional $80 billion of manufactured goods and over $550 billion in energy supplies from the U.S. over the next 2 years. However, concerns remain that the trade war that has roiled global markets over the past 1.5 years is not over. Data out of China showed exports rose for the first time in 5 months in December. So with that, we're going to move on to the analysis. As I mentioned, it's very quiet. So we're not seeing a whole lot. Moment. And pull out the old bias chart and take a look where we sit here with the euro. So the euro managed to close a quiet session on Monday above 1130, okay, providing bulls a minor victory. Support for Tuesday is 1105, okay, with resistance now at 1170 as the next key ascension level for bulls. So at this point, I mean, it's great that we were able to close above 1130, and you can see we're just barely hanging on right now, but key going forward is going to be this 1170. So we're tagging that as our resistance. We're still trading in a range. We could switch to bullish if we can get a daily close above 1170. And this is just going to move up to 1105. Yeah, it just looks like we're just going to be quiet until we get this phase one deal. Like I said, I guess everybody's just lean on this, and hopefully that generates or sparks some good momentum. But overall, I like the euro here. I think the dollar's had a pretty good run, and not that I don't think it's going to go gangbusters, but I do like it for making another move up here, probably at least to the 112. Maybe we can make a move higher, but we'll see how we play out from here. But got to walk before you can run, and that's going to be to reclaim the 1170 on a daily closing basis. Moving on to cable. Cable bears tested 28,980, reaching down to our bias chart support of 3061. 2961. I don't know why I put 3061, but 2961. Actually, it was our bias chart yesterday. I don't know why. It's pretty crazy. I don't know why I had that listed. No wonder I did have it even listed as a. Why I had that listed as 3061. But anyway. Before slightly recovering, although finishing below 130. Resistance for Tuesday will be 3050 on a possible short covering rally. Support is going to be 2936. So let's go and put this. There we go. I don't know why I had that for that list up for that, because we had that. We were looking for a break of 2980 with support at 2962, and for some reason I wrote it as 3062. But anyway, we're looking for today, as I mentioned, 2936, and that's really on the idea that maybe we won't be able to stretch much further. We've come as low as 2954. So we're looking for potentially a dip down here to 2936. We didn't put here this 3050 thinking if we could get a bit of a snapback rally, because you can see, look, it's just been down, 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 down. Thinking, okay, if we get a snapback rally, certainly doesn't look like it at this point, but if we did, we'd be looking at 3050 on the upside. Now moving on to the Aussie. The Aussie kept its recovery going in a tight range, challenging 69.14 or challenging the stops at 69.14. Resistance remains 69.42. That will be key on a closing basis. Support is not far away at 68.79. We're keeping it relatively tight. A daily close below 68.79 does open a challenge to 68.34. So we're actually, like I said, if we do go on and close in, and that is in a very tight range, but if we do close above 68.79, we are looking for a move down here. Right there, you see that? So we're looking for a move down here to 68.34. I apologize. Right there, coming on right there. 68.34. So if we do, so we're not giving it much room. We did kind of goose the stops a bit here at 69.14, but we're thrown back. This will be key. What I'm thinking is potentially, now, like I said, there are a lot, quite a few folks looking for much lower Aussie prices because of the concerns that not only with the potential for a rate cut based on the Australian bushfires, but we've seen a very poor consumer demand via retail sales and other data that would suggest or increases the likelihood of a rate cut as we roll into February. A lot of bets have already been placed. You would think it's probably done pretty well, but actually holding from here. But I'm thinking with the phase one deal, we get a bump. This is going to be key right here, right there, 69.41. What might actually happen, because we already had so many shorts put in place, is we possibly jump beyond here. And the key will be, as long as we close below the 69.42, or they're not able to close above that, from there we start to slide back on the potential for a rate cut. It's just not going to happen now. But I've seen a lot of bets already being placed for that. So key is going to be 69.42. I'm going to mark that off. Right there, 68.79. Now, in the Kiwi, no, the analysis was, no changes, and there really is no changes here. We're trading once again in a super tight range, and once again, I think they're just waiting for the phase one deal to generate some type of movement, which when you're looking at these antipodian currencies, the Aussie, the Kiwi, is the likelihood of a jump, and then we'll see what happens after that. So the resistance as well as the support is going to remain the same. Key on the upside, 66.58, downside 65.92, and you can see just a very, very tight range. With that, we'll go on and move into the CAD. And actually, it was the same thing here, just very, very tight range, no changes. You can see here, these two were almost identical right here. And we finally pushed a little bit higher. Once again, sound like a broken record, but it certainly does seem as though everybody's waiting for tomorrow to generate some type of volatility. On the upside, we're looking at 30.92. And on the downside, 30.27. I kept it in check yesterday. I mean, the low is what, 30.31. Upside, boy, what a tight day it was, 30.67. So see if we can come up to 30.92. But dollar CAD still remains bearish, at this point. We'll see if something's going to go and change. We had the opportunity the other day as we pressed above 131, but we quickly slid back. We also had the Canadian jobs report, thought we might even take a jump at that point. So until something changes, actually we would need a daily close to kind of flip things to solidly bullish, or actually bullish, I should just say, which would be a daily close above 31.81. But it's going to be resistance here, 31.13, 31.36. Moving on to dollar peso, this one's interesting in the sense that we have just continued to languish lower, and you just can't simply get a bid to save your life. And the ranges to keep getting, as just with many of the other pairs, but you can see over the last, nearly 4 trading sessions that the range has been exceptionally tight. And it certainly looks as though we want to, or at least the market wants to make a move. And we may see this on phase one signing, I would think, which is going to be a move down here to 1865, which is now going to be our support. We're thinking the market will go on and slide. which is confluencing with 1861. And that's going to be the 161% of this failed rally. Here to here, there's this 161%. Confluence with 1865. No changes in the dollar peso. As I said, unfortunately, appears as though everything's sitting here quiet as can be until we get to the phase one sunny deal. The one pair that has moved is obviously even Gooseham stops. I got stopped out myself on my short, and I decided just going away. I wasn't going to widen out the stops or anything like that. The only thing that I did notate or note yesterday is that things have been so quiet that I've kind of stayed to focus with, on the 30-minute charts. And I think we talked about this yesterday. And right here, it actually had this close just above that key level right there, 1067, and I almost said, I should just go and cover it because that momentum is going to take us in. Certainly we didn't. And my point being is that we're so quiet overall, and not only quiet, but until we see some major changes, really some major diversion from what we've been experiencing over the last year, these moves don't last very long. And so at least for me, what I've seen is that I think it's better to go with, for my own choice, to go with the signals on a 30-minute chart, because most of the moves don't last for very long. So before you get one move going, it already starts to end and we start to slide back. And that's been the concern with the lack of volatility. Don't necessarily need to be looking at 5-minute charts, but I think the 30-minute charts provide a better opportunity than to trade with some of the frustrations been when people are looking at some of these longer term charts. Obviously, the cable's been one that's been just a steady mover, initially on the way up to the vote and then on the way back down. But so many of the other markets we've seen is you barely get going in one direction before you lose that and the market starts to slide back. But that's just my observation, that I've started to focus a little bit more on a 30-minute chart for the setups. That being said, let's just jump back here into dollar yen. So the dollar yen closed above 964 for a fully buy mode with expected moves to 1047 with a pause at 1007. Support is followed by 964. Support is now 964 followed by 935. So at this point, we did get that pause a bit here at 1007. But at this point, what we're looking for now, ahead of the China phase one deal, you can see right there, coming in right there, 1050. I think we're looking at 1047 on a 2-hour chart, but you can see right there going in. Right at 1050. That will be our resistance level, at least that I'm looking at. Let's go and mark that off. $964 on the downside. Let's go and move into the cash dollar index. Well, we're stuck right now. Once again, China trade deal and so forth. But this 97.42, we need a daily close above 97.42 to generate some further buying interest. But you can see here, we've got a downtrend line. You can see coming in right there. 97.67 comes in here. That's our initial resistance. But the big key is Can we get above 97.89 on a closing basis? That's going to be the key for right now. As I said, 97.67. I've left this as bearish because it is below it, and we're holding here now. We'll see what happens. As I mentioned yesterday, or maybe it might have been, I don't know if it was in the. I did cover the daily roundup for Blake, who was once again is traveling, came back late and was pretty tired. So I wanted to go on and cover for him. But I think it was in, I don't know if it's that I mentioned or in the European crossover yesterday. Someone was asking me, was this a false break lower? And I don't believe that it was a false break lower, because it's not like as if we snap back immediately. You can see here, once we got down here, we sat here, we rallied up a little bit, we came back down to test, we rallied up higher. And if it was such a false break, we would have seen this market already much higher at this point, and it hasn't. So to me, it still has to prove itself. We need a daily close above 97.42 to generate for the buying. Immediate resistance still remains 97.67, and on the downside, support's going to come in right there, 97.13, right there. So no changes yet, and don't necessarily expect any changes until after tomorrow. With that, we'll go on and move into the cross rates. Well, you can see here the Kiwi yen. It's still just like so many of these other pairs, relatively quiet. Now, it's continued to go and move higher, not to the extent that the dollar yen did. We have a resistance from yesterday, still remains the same, 73.05. We've gotten as high as today as 73.03.5. 73.05 is still going to remain the same. We shall see where we are tomorrow as we go into the expected phase one signing deal. I can push this a bit higher, but for today, the 73.05 is still going to hold, which is going to keep this for our resistance. Support will go on to move. We will definitely go on to move higher here. Well, 72.52. No, we're not. We're going to go and keep that the same. We did have that as a very, very tight range, and with the bid, yeah, we'll keep that the same here with 72.52 as we go forward with this graveyard trading. We did see a nice little pop-up here in Euro Yen. Actually made it up here to 22.64, although we haven't closed above it yet. And not that far away from the 61%. We'll go with this. 22.64 is that key level. It did get above it, but we'll go with the technicals right there, 22.64. We pair this back or pull it back. You can see here significance of 22.64. This will be a target for them to go and shoot for. China phase one deal will be this. That's not even that far away, but the 23.04. We'll see between that and 23.50. We'll see what we do, but let's go and move into the Euro on. We did go on and manage to hold here with the Euro odd. Euro's had its own tough time, and then the odd has even had a tougher time. So we've gone back and forth as a tug and pull. It's kind of almost funny. We slid down, we went back and forth, then we rallied back up, going back and forth. We come back down. So it's just this market has really gone nowhere fast, if you think about it. Just trading in a very tight range overall. I mean, as far as we have had some movement, it's just not able to generate a sustained trend other than the breakdown right here. On the upside for Euro-AUD, did make it above the 61.33. That moves us back up here to challenge 61.93. That will be the resistance, 61.93. We may be able to put ourselves in a position where the euro can continue to gain a little bit further with the potential for a rate cut from the RBA. But once again, this market has not been able to sustain any real momentum. On the downside for support, I'm going to put this just below. Let's go right there. 60.92. And the Euro Kiwi. The potential, even though we are holding up rather well, the potential would be that with this phase one deal, we may see the Kiwi get one more last pop and yank this down here. But for right now, resistance is going to be right there. We're coming off this close here. 68.60. Still bearish. Support is going to be right there, 62.72. 62.72. I meant that is 67. I don't know what I'm thinking. Right there, I meant to say 67. Let's call it 67.22. Yeah, which is what we had already before. Aussie is still a bit bid here. This is its opportunity to, I don't want to say shine, but looking forward, 76.19 still is and remains resistance here for the Aussie yen. Move this out of the way. We'll see whether or not we can maybe jump a little bit further with the phase one deal. And on the downside, support is going to be 75.20. And with the guppy, I mean, I sure will be glad to get January 15th passed, over and done with. These ranges are for the birds. Resistance on the upside is going to be 43.10 with support at 42.23. You can almost tighten that up because we're trading so tight, but it is going to be 42.23. But this is unbelievable. Look at that. Although when you look at this, oh, but that's once again 36 to 96. What the euro dollar wouldn't give to have 60 pip trading range. I mean, that's how much lack of volatility has been. But anyway, it looks like basically almost nothing, but we had seen some pretty good little movement. But no changes here for the guppy. And let's go and move into sterling. Sterling odd. So we did go just below here. This kilo 87.88. Now we did just take a dip below the trend line support here. We're still keeping a bid here. I would expect it to hold a bid. We may see one quick little dip with the phase one deal, but once again, the potential for a rate cut is going to keep Aussie under pressure. So we may see a quick dip here in the sterling odd, but I would still expect this to recover and then potentially make a move higher. So support remains here at 87.69, and resistance is going to remain the same at 88.52. No changes here. Now, we are starting to get a little bit of a whip of volatility here. You can see here with the SPOOs. And I was even surprised. I mean, we were able to go on and push even higher, making it up to 32.96 3/4. We did see a quick dip. Look, I mean, we paired back, and then we saw a pretty good dip back here to 76. And now here we are rallying 14 handles right back here. So resistance for right now is going to come in at 32.91 essentially. I think Blake has a 161% extension. I believe it's a 3306 or 3310. So certainly something to keep an eye on with those big hullabaloo that they're expecting with the phase one deal. Crude oil continues to remain below $60, and after the big run up and then the pullback, no real movement since then, although we've managed to slide back below here, just below $58. And as we mentioned earlier, gold. Had just taken out those lows here. And got a feel for those on Friday that jumped in trying to short it and then got stopped out. Only see this shiny metal come back down and make new lows on this run. Kind of holding at this area. Once again, here we are looking at the euro. It's trading exceptionally quiet. You know, we were talking about that guppy, and I was saying, well, I mean, it looked like it wasn't moving, but it still was in a 60 pip range. But that being said, obviously, certainly impacted by the yen. So I have more to say about the yen than it is anything else. But I was saying, boy, what the euro wouldn't give for a 60 pip trading range. As I said, I can remember a few years back when the average daily trading range used to be right at 130 pips. Average daily trading range. Boy, we wouldn't give for only half of that. But everything else is relatively quiet. Cable still pressed on these lows. We're looking for support here at 29.36. Yesterday we had 29.62, although I think for some reason, I don't know why I had it marked as 30.62. But if we were to see a short cover rally, that certainly doesn't seem likely at this point. I mean, a move doesn't seem likely, but if they were to see that at this point, we'd be looking for 30.50 as a resistance. Other than that, everything is just quiet as quiet can be. Ahead of the phase one deal, I really just don't see anything that is worth an opportunity, with the exception of cable. That's already, as I mentioned, at 29.36, where I think we'll see some short covering at that point. But how much? I mean, every little bit of a move here is quickly pushed back down. But even if we do see this covering, some support come in at that 29.36, as I mentioned, how much of a rally would you really get on short covering? Doesn't seem as much, but our resistance would be 30.50 if it does go on and make that move. I guess there's some resistance here at 30.16, but the key would be 30.50 if we can get some decent short covering. That's going to be it on a very, very quiet session ahead of the big one, phase one deal signing, which I don't see necessarily why that's such a big deal, but certainly that's what the market's waiting for. With that, thanks for joining us here on the European Crossover webinar, and we'll catch you in the chat room.